Welcome to Celico Life News Capsule. By market end of the 12th of June, the all-share price index surged to a record 17,661 points, signalling renewed domestic confidence even as foreign inflows remained cautious. As Sri Lanka's stock market continues in similar vein, outgoing chairman of the Colombo Stock Exchange, Dilshan Wirasekara, who took that seat when the nation and the market was in the doldrums, is on the show today, unpacking his transformative tenure and what's next for investors. You've been chairman of the CSE now for about 3 years.
That's right.
And you took over at a time where everything was very difficult in the country, from COVID into the economic crisis. How has your tenure been?
Challenging at times, but I must say very rewarding as well. I look back with a lot of pride and satisfaction. We've got quite a few things done over the last 3 years. So a great sense of satisfaction is what I would say.
What were your expectations of the market when you actually took over the reins?
So I always believed in the fundamentals of the market, Savitri, and I think that's something I've been repeatedly saying, look, this is a market that's undervalued, that has a lot of potential, and we've seen some of that potential being realized over the last 3 years. So I think really Sri Lanka's recovery is mirrored in the stock exchange, and we've seen that in terms of valuations or market cap or performance also being sort of illustrated over the last 3 years. So it's been a good run.
So given that you did take over during the storms, what would you consider your greatest triumph given the backdrop that you actually worked in?
So if I am to pick one thing, I think the stock exchange is about creating wealth and value. That's our tagline, right? And if you look at over the last 3-year period, the market cap has increased by over 2 trillion rupees. So we've created over 2 trillion of wealth for Sri Lankans, and I think that's probably the biggest achievement, I would say. Not that it's my personal achievement, but from an exchange point of view, that we've been able to create that amount of wealth.
What were your sentiments when you moved into 2025?
So I think we had a lot of problems back in 2025. The fact that the government has chosen to stay the course of the path of reform, IMF program, have been good on the market, but also we've strengthened the market in 3 aspects, Savitri. So when with the exchange, when I came in, we focused on 3 things. One is the product diversification. So we were essentially a single product market. We've rolled out numerous new products, specifically on the fixed income side. The debt side, we've brought in sustainable bonds, we've brought in infrastructure bonds, we just issued the last sukuk, stock borrowing and lending, short selling. So a lot of product diversification has gone in, and that we've done. We've then looked at market infrastructure and developed market infrastructure. So we moved from T+3 to T+2. We'll be going live with the CCP, Central Counterparty System, on the 17th of July. So on the infrastructure side also, we've upped our game. And then the third aspect is really the spread between broad basing the exchange, investors, issuers, increasing that whole space. We've had limited success, I must concede there. I would have liked to see more IPOs happening. I would have liked to see more new accounts being opened by investors. While we've had some success, I would say that that is maybe not up to my standard of what I would have liked to see, but nevertheless, on all of these 3 pillars, we've done a lot of work over the 3 years.
So the market is currently looking good. What do you attribute that to, and do you expect it to stay this course?
So I think it mirrors the macroeconomic fundamentals, and Sri Lanka is in a good place. We are growing at 5% plus. All indicators of economic growth show that we'll probably have a good growth numbers for the next few years. So I expect the market to mirror the performance of the economy. However, the market is still very much undervalued, right? So and it's facts. We are trading at 8.5 times multiple, and just 1 time over book. Anywhere regionally you look at it, valuations are double that. If you look at the bottom lines of the listed companies, you would have seen the last quarter coming in very strong. So we are seeing company earnings have grown by about 70-80% over the previous year's first quarter. So that's again going to make this market even more cheaper. So I have no doubt that the next few years is going to be a good run again for capital markets in general.
Going forward, what should investors be aware of and what should they bank on?
So just focus on fundamentals. I think at times when our market has sort of got overheated or whenever there's been high speculation, people have burned their fingers and we've had this boom and bust cycles that have taken place. However, this time around, the increase in our market cap is driven by fundamentally strong stocks. It's not speculative shares that are driving this resurgence or this boom. So I think as long as investors focus on fundamentals, you invest on value, you won't go wrong, and I think you'll make definitely good returns. Low interest rates are going to help that. So your alternative in fixed income today is single digit, whereas in your stock exchange, your expectations can be greater, and it's also more tax efficient asset. So your fixed income, you're taxed at 36% at the top bracket, your capital gain still is 0% tax, and dividend income is 15% final. So there is a distinct advantage for any investor investing in equity. And I think as long as that remains, you're probably going to have another good period.
Looking ahead, what's hot, what's not, what sectors are showing promise?
I think the banking sector, my personal favorite, is still very much undervalued. And looking at the credit expansion and the economic expansion that will happen, you would put your money that banks would do well this year, that they would grow their balance sheets, they'll be more profitable, their spreads will sort of retain. So banking sector is my personal favorite. But I think any manufacturing or consumer related business is going to do well because we are seeing consumer spending, the appetite coming back after maybe 5 years of a lull, that people are having more disposable income in their hands and more importantly willing to spend. The opening up of motor vehicles is one such area, so you'll see a whole boom of new vehicles coming, and that again translates to a lot of other economic activity that can take place. So I think manufacturing, consumer and banking and finance are my personal favorites.
Kaleidoscope is on YouTube, Facebook, Instagram and LinkedIn. Do subscribe, follow and like us if you want more of us.
You focus on your goals. We will take care of the risks. Silico Life.